Ladies and gentlemen, let's get right into the markets, then we will answer your questions. So if you saw our video a few days ago where we said I decided to put on some calls on a few shipping companies, I'm relatively bullish going into the next week or two, mainly because everyone's bearish. I'm super bearish in the midterms, and more importantly, the OPEX was Friday, and a lot of puts expired. I don't see a situation as of right now as to why more puts are going to come online and drive us lower. Just like how we always talk about GME, where we need repetitive call buying to really drive the delta hedging to drive the stock up. The same thing happens on the indexes and the S&P. All these puts are just expired, and I do not see a reason as to why they're going to get piled back on, as we talked about in that video. So I think you guys might understand that. And we were this whole last month when we were in OPEX, we were in a gamma flip zone where these dealers were long volatility, but that kind of closed up, and it would take a pretty drastic move to the downside next week to get back into that gamma flip zone where they're back to long volatility. So I'm actually very, I think we could see a very high snapback rally over the next week or two, just because of the way the dealers are positioned and how bearish everyone is. I'm extremely bearish. I mean, I'm pretty much as bearish as one can get looking out to the medium term, but next 2 weeks, I think we could be very surprised to the upside. And I think that's a great opportunity. Maybe not just to re-enter your short positions. I personally put on some longs on a few shipping companies that they kind of just blew out earnings and the stock just decided to trickle around. So I have quite a few calls on some shipping companies. I'm not currently long the market, but I would not be opposed against it, only as a very short-term trade. And then I plan on, in like 1 to 2 weeks, I hope the VIX gets crushed, and then I'm going to go ultra short the market, because I think that we could have a decent chance of actually going into a recession in Q2-ish, because I think the GDP, there's a very high chance that it's actually negative. And if the mainstream media comes out as consensus that we are going into a recession, we could start to see liquidity dry up. And we've had a very controlled stock market decline. There's been no sort of liquidity events yet. And this is like the Fed's wet dream. And until something breaks, this is going to continue to happen.
Gotcha, Josh. So the one thing I'm curious to see what's going to happen out in June, stepping away from the GME realm, is I believe the next Federal Open Markets Committee meeting is on the 17th, is what I think. And so very curious to see what the Fed's going to do in terms of hiking rates again, mainly because
they do plan on stopping QE, I believe. That might be an early July. Either way, I mean, I'm very, very bearish. But just because I'm only looking at dealer, I'm not looking at fundamentals. Fundamentals are still horrible. It's strictly dealer flows and sentiment. Yeah. I mean, I think that's pretty much it on the stock side with what's going on for me.
Yeah. No, like I said, just curious to see if there's a third rate hike, because generally in the past, when they've done the third rate hike, that's kind of when the sets into the market. The market's like, oh crap, the Fed's actually serious in this regard. We need.
I think when we start QT, like just for you guys watching right now, when for a real bear market, think back to COVID when we were crashing. Like, this has been a very, very subtle decline, going down 1-2% per week. I mean, it's a little bit more, but it's been very this is what the Fed wants. This is like their ideal situation, because liquidity is still there. There's no liquidity event, which was what you would need if you want to see a crash. Because if you just look at the bid asks, you're getting filled on 1 to 2 ticks, even though that's all algorithmic based. When you see a real crash, it's when you try and get filled at 30 and you get filled at like let's say you're trying to sell at 30 and then you get filled at 28. That is when the liquidity starts to dry up and there's no more buyers, and that's when it really starts to get scary. And I think that liquidity event, if I had to take my best guess, probably once once the I won't even take a guess. If I were to throw some numbers out there, I would say looking at 2 to 3 months is where I'm looking at. And I do plan on very heavily re-entering my short positions on the market.
Okay.
Well, which institutions is going down? Well, Melvin Capital is closing up shop. That is for sure. Are you buying any calls? Yes, I bought some shipping companies. Zim crushed earnings. I was playing earnings. My calls are up a little. DAC as well. Davios. A lot of people hate shipping. I love it because they're extreme value right now. And that's kind of the way I'm playing it.
Yeah, and just to go back to what's institutions going down, my bet would be Tether is probably going to be the next big domino to fall, but we'll see.
That would be pretty big. That would be pretty big. Yes, we did start a live stream. Thank you. Yeah. We have to do it early today because I shockingly have plans tonight. So what up, all-nighter? Hider? my friend, wouldn't wouldn't wanting a MOASS to happen be a negative mindset, considering MOASS would severely damage their wealth? Yeah, yeah. I mean, same thing for people that were going short the markets in 2008. I mean, it's going to be very bad for everyone else, and
Yeah.
that is just the fact.
But if you go back to that one, Ethan, so here's the question. You have to ask as compared to what? So maybe a good example of this might be like if you have someone, it's like an intervention with someone. If you have someone who's like, smoking 6 packs a day of cigarettes or whatever, right? And you have to tell that person, hey, listen, this isn't going to be good for you in the long run, even though you're not necessarily having the immediate health consequence now. The sooner you bite the bullet and deal with the problem, the better it's going to be, even though the biting the bullet and dealing with the problem will not be a fun thing to go through at the point in time. The longer you put it off, the worse it's going to become. And arguably, we've put it off for a very long time. And I mean that just in general, like market mechanics, the fact that we don't have, same day settlement, the fact that we don't have serialized shares, even though we have the technology now to do so, like it's like we're walking around in a warm, wet diaper. It might not feel that bad, but it's a problem, I would argue.
Aren't we already in a recession? Yeah, I mean, we're damn close. Not technically, a recession's two negative GDP numbers in a row. We are not technically in a recession, but I would argue that we most are. It is almost, I would say my probability of recession right now is well over 80-90%. I think there's an extremely high probability. Oh, Walmart, Target, yeah. I mean, they just got absolutely tanked. That's kind of like the staple of where people shop. I think a lot of that actually has to do with stealing. I mean, stealing is getting really, really bad. Have you noticed this in your area, Justin? I mean, like people just don't pay for stuff anymore. Like if you go to self checkout, you'll see that people scan their items then just leave. Like it is absolutely insane. Like I'm telling you, like people like the stealing and where else does that happen? Russia. The reason is because people are losing faith in their governments and they can't afford stuff. So I have a very grim look on the economy right now, and I think there's a pretty high chance that we get into a depression.
Yeah, I mean, I would say like if people don't have to, or if people are no longer afraid of the consequences of doing something, like why wouldn't they do it? Like if you believe or you
Oh,
have reason
literally
to
no consequences. I mean, I
yeah,
don't think you can even get fined over like $900. I mean, like it's free. It's literally free stuff.
yeah.
It's stupid government intervention. I mean, this Atlas Shrugged just bang on. Uh, Bill, what do you think of mobile home? I think mobile home parks are an incredible investment. They're only going down, and I really, really like them. I have a lot of I have some friends who own a ton of mobile home parks, and they absolutely love them. The cash flow is great as well. And if we do go into recession, people are going to downsize their houses. And what would you do? Maybe you buy a mobile home park. I mean, a mobile home to be on the
Yeah.
road. Maybe you don't feel as comfortable. I mean, I think a mobile home park is a very, very good investment.
Yeah, and the second part from that too is that if you don't have a lot of infrastructure, you just simply have like like a concrete pad and some pipes and maybe an electrical outlet. If you're in a state with high property taxes, generally that means you can probably skate by with a lower property valuation, and that means a lower tax bill because there's not a lot of improvements versus actually putting up like an apartment complex, a self storage complex, whatever, for that. So yeah, a lot of
What are your thoughts on Melvin winding down its fund? I am curious why this is public knowledge. Do they have to report this? Seems sus. Could they have transferred GME exposure to another firm?
So the first part of the, or the let's do the last part first. Could they have transferred GME exposure to another firm? Probably.
I
And
would argue, Justin, if you have $1 billion, I mean, if you have $1 billion, if a bank, I mean, fuck it, Justin, you know the quote, Jesus, like
oh,
where if you're short $1 billion, the bank has a problem if you wind down your fund.
yeah. And what I would say is this too: is like if you know that you're going to go down through, let's say, a short position that you can't close, but you can kick around at least almost indefinitely, like, wouldn't you want to, like, spread this toxicity out amongst all your peers? Because you might say, okay, listen, if it's just me that's done the malfeasance or whatever, right, I might get in trouble. But if they have to come after all of us, all of the people in the same category, I'm not saying they won't do it, but I'm just simply saying it's going to be that much harder. And if nothing else, I'll have more of my, I don't say enemies, but I'll have more of my what's the word, frenemies on my side. So I would suspect that if I was short, I would want to, even if I couldn't get out of my short position, I would want to claw in as many other people that I could, even if I hated them, because that way we have this, perverse alignment of interest to push back on, and it's all the harder to clean up. So to answer the last part, yeah, absolutely, it would not surprise me at all to see it, parts of it, transmitted out and infected through the entire system. Um, and as far as Melvin, the capital or the public stuff, I think if you're a yeah, hedge funds or whatever, they're private, but I do think they have to file like what quarterly disclosures. There's some like regular filing they have to, put out, and that's
Shit,
part
Justin,
of
I'm
what I do.
frozen. I'll be right back.
Okay. We will see Josh in just a second here. Let's see. Melvin blowing up teachers' funds. Maybe, like, I thought it was particularly interesting. Didn't something come out on Superstonk saying that Griffin and probably some of the other usual cohorts were sitting on the board of some Chicago, some Illinois-based teachers fund? I would not at all be surprised to see that's the case. I mean,
I think MOASS would fix a broken system and redistribute wealth to people who have a better chance of doing something more productive with it. It would also create a big taxable event. Absolutely. I mean, this is absolutely a chance, but I do think there's a lot of risks too. A lot of people that probably have, bro, I don't know why I'm freezing so much. Can you still hear me, Justin?
yeah, you're coming in through fine. It's like
Yeah.
that is, hearing. So
Yeah, take the question. I'll try and fix this.
yeah. So touching on the taxable event thing, I think that's particularly interesting because, like, if you have a taxable event, so if you guys follow PyFi, like one of the things that he mentions is that the regulators are going to step in and stop it. And my response is, well, they might, or they might stop it to an extent, but there's probably a reason, or there's probably a silver lining for the regulators, mainly in the fact that if you wanted to get more currency units into the economy for whatever various reason, or that is the Fed wanted to get more currency into the economy for whatever odd reason, a failure of a DFMU through like a MOA style event would give the ability for this to happen, and at the same time you get this massive tax windfall from whatever what was it 30% gains or 30% capital gains tax on short term gains, and I suspect the majority of people will have short term gains. Some will have long term, of course, but I think the majority will be short. So yeah, I definitely think that there's a silver lining for the regulators. They might not necessarily like it to happen, but they also might not. But it's true the regulators might not want MOASS to happen, but if it does happen, they can probably allow it to happen in a way that benefits the system, so it won't be an automatic negative for the system from the regulators' standpoint.
Justin, this is probably more your bag. I sold
Yeah.
$90 close covered calls on GME that expired on Friday in the money. I have yet to be assigned. Did I dodge a bullet?
Ooh, that's a good question. So they expired in the money.
What did GME close at?
It closed at 95. Wait a minute. If it closed at 95 and the strike was at 90,
you'll get assigned Monday. Like it always gets assigned after the weekend. So okay. you did not dodge a bullet, no. Cost of borrow will continue to rise this week. Probably. The last run up, we saw the cost of borrow start to rise slowly, and then it got very high during the squeeze.
But also, here's the thing: like, so the last run up started. When did it start, guys? Like Marchish. Like, didn't it? Because everyone thought it was
a slow rise of everything building up and all the bubblings really.
Yeah, and it was like, but here's the thing, right? And like Piva mentioned this earlier today on his stream. It's not like you haven't seen the borrow rate go back down to like 1 or 2%. Like I think it hit a floor of like 5-ish or so. Yeah. And so the point is like we are restarting this next cycle from a higher low. Anyways, I'm not quite sure what that's going to mean in the scheme of things, but or back up. What it signals to me is that there is less liquidity right now out there than there was in the prior cycle, and I see that as a net plus for people who are long GME.
I like this question, Justin. How often do you work? Justin, you take it first.
Oh, all the time. All the time. Josh, yourself?
Well, me and Justin are gentlemen of leisure. Not real. I actually just got I got a new job. I'm working for Ken McElroy now as well. So I'd like to work more. I've been pretty lazy. By work, I mean it's mainly just mental exercises, but I do consider that work. Reading, doing research. I do work for George, but that maybe 2-3 hours a day. For Kenny, maybe another hour a day now. So like work where I'm actually getting paid, probably I don't know 4 or 5 hours a day. Not much. And that work, I mean, I can do it anywhere, which is great. But work on my own, I'd like to bump that up to maybe like 10 hours a day to really get some maximum results. I used to be much better. Justin, what about yourself?
No, like in all seriousness, like what I find, so like again, real estate's my main bag, and what I find in real estate is either feast or famine. Either like I'm incredibly busy, my days are incredibly dense, or you're just like sitting around waiting for stuff to happen. And so I've yet to manage the art of like doing like both at the same time. But generally, the beginning of the month is a little busier for me than like the middle of the month, and that's just due to the cycle of rents. Checking.
Can you turn your mic up, Justin?
Oh yeah. How's this? Too loud?
Well. Midnight City, please let us know. I don't have an option to turn my mic up or down. I can stand further away.
I
So,
can go a little closer. There we go. Okay.
why do you? Oh, you answered.
No, no, yeah, no, no. Actually, that's one. So right here. So J, yeah, this
Yeah,
is the
why do
one
you
right
think
here.
Tether will be the next institution to go down? If you've looked into Tether, basically they're a stable coin where they're supposed to be holding one-to-one assets pegged to the dollar. Okay, well, yeah, and
Yeah,
so right now they're starting to get liquidated a little bit, but let's go back to the like kind of the psychology and philosophy behind it. So they're supposed to own 100% treasuries because that's 100% dollar backed. And like what will happen though? They own corporate debt and they also own other government bonds. What happens as the dollar rises in value? Well, those other bonds are actually going to fall in value relative to dollar. So how are they one to one? Like how will that one to one backing stay if the dollar continues to rise when they own other country bonds that
yeah.
and other countries' corporate bonds at that? So that's going to be a very difficult situation. And how much of it do they own? I mean, they own some T bills, but like they own a lot of garbage. And if we see some liquidity events and people start to dry up some of their tether, we could see a very quick situation where tether just loses handle of their one-to-one backing and inevitably goes bust. I think if I had to put if there was a way to bet on tether going bust, I would put a handsome amount of money on that.
Yeah, and like the way I would approach it is this, Josh, as you said, psychological. I completely agree with that. Remember, like Tether's role within like the crypto community, and that's when people want to cash out to a stable coin. You've got USDC, you've got USDT. Until only last week, I guess you had UST, but that's a separate story right there. But the thing is that like when the reason people hold tethers from a psychological standpoint is because they want as little risk as they possibly can. Look, if you buy Bitcoin, ETH, or whatever, right, it will go up, it will go down. That's not news. Like you kind of expect it. If you buy Tether, if you buy USDC, if you buy UST, you do not expect it to go up or down. The reason you buy into it from a psychological standpoint is you want risk off the table. And so when you see Tether, and Josh, this is to your point, like if Tether truly is sitting on like, cash and bank accounts or, US treasuries or whatever, right? Hey, no problem, whatever, right? It's basically a proxy functioning as a one-to-one ratio for, like one tether equaling $1 or whatever. And that stair-step pattern on that graph, that's basically showing if you're a large, holder of tether, like an Alameda Research or whatever, right? Like see these stair steps right here? If you go back, these are like billion-dollar liquidations. And it's not necessarily liquidations in a bad sense. People basically just going to Tether and saying, hey, listen, Tether, I want, like $1 billion of cash or whatever, right? Here's my billion, USDT things or whatever, right? And so Tether, and to give Tether credit, like as I understand it, Tether is meeting redemptions. So good on Tether. That's good. But the problem is that if something were to happen that would break the confidence, this is where it gets tricky. It doesn't matter if it's something that's real or something that's fake. All that matters is that confidence is broken. So people believe confidence is broken. Then you essentially have a run on Tether. And then when you consider all the trading pairs that Tether underwrites, both on centralized exchanges and on decentralized exchanges, you have like this velocity problem. Because if you take, let's say, again, numbers on my backside here, let's say 50% of crypto trades, off the table, or you take 50% of liquidity pools, both from automated market makers and from the centralized exchanges. And if Tether suddenly goes down in value, it's going to be a repeat of what happened with UST, but on a much larger scale. All cryptos are going to moon in terms of UST. And it's not so much Bitcoin going up, rather it's Terra going down. Excuse me, not Terra, it's USDT, excuse me, it's USDT going down. And so you see that going on. And at the same time, too, when people tried to get out of Tether, the reason they were in it for the first place is because they didn't want it to go down. They were trading potential gains for stability. And essentially, Tether's like, oops, just kidding, it's not stable there. And so if you see anything, or if you see a repeat of what happened with UST, you would probably also see a sell-off of the crypto market in general, particularly if Tether was, let's say, sitting on a bunch of Bitcoin, and they have to sell Bitcoin to maintain their peg, which further depresses the asset prices down across the board. So you get this death spiral that goes down. That's sorry, very, very long-winded way of saying that's why I think Tether is, if Tether can meet the redemptions and maintain confidence, it won't be a problem.
They
But if
also did
something
just come
slips,
out on one of their new corporate papers. They were like, "Oh, we're buying more UST. We're trying to get rid of most of our corporate debt, and we're going to buy
right.
treasuries. Oh, we're fine. And also, we may have this small lump of collateral that we have, but don't worry about that. We're fine. Like, there's no situation. I mean, they just literally said just collateral. Like what is collateral? That could literally you could put up your used car as collateral. You could put up I mean, quite literally anything. They could be putting up their
$1
Bitcoin.
billion.
Yeah,
Yeah,
yeah.
this pen's worth $1 billion.
It's just a huge Ponzi scheme. I
Yeah. Oh, Josh, one other quick thing too. Here's another interesting angle on Tether where they might be able to sneak through. So not everyone can redeem Tethers. Okay, that's the other thing, right? Like if you're a big guy, you can, but the little guys can't. They're not going to go through the KYC or whatever or the AML procedures in order to do that. And if Tether can satisfy the redemption request from everyone who can redeem, but they don't have enough cash, or they don't have enough collateral to satisfy those who can't redeem. I don't know if they'll ever be able to have their bluff called, because if you can't redeem, you never would have, Tether would never be in a position to have to gorge up, or whatever the phrase is, or return the collateral. So that's another very interesting, metric you see playing around here. But I don't know what the answer is, but fun things. Yeah.
All-nighter. I agree it will get worse for the simple reason that neither the sheeple nor the people are demanding austerity or holding anyone to account. I think Justin probably hits the nail on the head when he says it is hard to bounce back before you hit rock bottom. And we are far from that. People are still spending. I think there will be a time where it gets very dark and people will be consuming astronomically less than they are today. And
Didn't someone...
hopefully we have that wake up moment where we are ready to swallow the pill. And
yeah,
I hope that we do not call out for a leader in that time to tell us what we need, aka a takeover.
Yeah, and I want to say too, like there was someone I once read a long time ago who said words to the effect of, only at the edge will people find the will to change. So it's going to get worse before it gets better. That's the bad news, but the good news is we're probably exactly where we need to be in the process. So.
Ethan, oil price by the end of the summer, I mean, sadly, I think it will probably be up. Well, there's a lot of cross currents there. If we do go into a recession, I do think the price of oil will most likely go down, but there's so many supply problems. I mean, I was talking to someone who has very, very high connections in the oil and gas business, and she was saying that one of the big things that they're seeing is that they can't even get the pipes. Like the problems are that like it's not even like, no matter what, even if you had the oil and gas, you can't get the steel to put the pipes in to travel the oil and gas, and nor can you get the workers. I mean, it was just there's just so many things wrong with the oil and gas. But I do hope that the price goes down. I'd love to buy some. I sold most of mine around like $90. It was a decent trade, but I missed out on most of the gains. And it's just crushing. Like for nonetheless, I want to go long oil just to kind of counter hedge my gas bill, because I'm sure you guys are eating it in the ass as well. Besides Justin, who drives a Tesla.
Yeah, I don't know what gas is doing. Like, is it $10 yet? I mean, is that expensive? So sorry.
Would y'all go long GME or short the market? I love your contribution, guys. Keep them jacked. I both. I mean, I think that's a great counter hedge. So I love to go both short the market, and I'm also very long GME.
Yeah, so like the way I do is like I really don't play the market in general, save GME, Bed Bath and Beyond, and a few like silver miners, or like commodities. Beyond that, like I just don't deal with that. Probably the biggest trade that I've done, and this was how I was able to end my GME trade, is that I'm very long metal. I have a bunch of metal that I sit on that I borrow against, so I'm short the dollar, long metal, and then that's what I turn around and use for my my GME and Bed Bath and Beyond shenanigans. But the key thing is that I want to be short dollars and long a commodity for that.
Predictions on how MOASS price action will look in the beginning: sharp decline followed by a sharp increase, multiple halts. Do you think it will start in pre-market or after hours?
Yes. Well, we say so. That's a technical question. There's a really good there's a really good DD done by PyPhi talking about like the metrics of a short squeeze. It's maybe about like 4 or 6 months old. Like, check out that, because I think in phase one, so the answer is you're going to see halts, you're going to see I would suspect you see regulators step in. I think like, what was it, 2-3 months ago, Gensler putting out that tweet from the SEC, like, oh, by the way, we can freeze equity tradings for 10 days, don't forget. Like, that's not an accident that he put that out. So I do think you'll see a lot of shenanigans that are going on, but you'll probably see a spike up, massive volatility, and then a continued spike. But again, like this is
I just think it depends on what's driving it. And is it Citadel going bust? Do they just don't have any capital? They go bust, and then they have to liquidate. Is it extreme option FOMO because of maybe a share dividend split? Like it depends on what's driving the initial start of the movement, because it could be slow and then it builds momentum, and then one of these firms goes bust. Then it's more parabolic, or it could just be boom, out of nowhere one of these firms goes bust. So I think it depends on really how this kind of plays out. So I don't know. If I had to take a guess, I'm not smart enough to do so, honestly.
Yeah.
When we get the share divvy, can brokers lend them straight out away? Too short?
So I think this is going to depend upon the type of dividend that's coming through. Someone on a PyPhi stream earlier today asked his thoughts on if they were to do what's it? Is it a reverse split? In other words, you have two shares, now you have one share. It's like taking a $250 bills, turning it to 100 or whatever, right? And I think in that situation, it would force covering is how I understood it. Like that's more of a market mechanic question, so it's kind of out of my wheelhouse. But what I would say is, to the point of that front, if it's issued as a dividend, like so if they're giving out more shares, then I would assume that the broker would be on the hook for delivering the benefits, these shares, to the people that they have on their own books. Whether that means they turn around and immediately send back out the shares, that I don't know. But like I would assume that the brokers, or I would assume people who are short, who have facilitated the short lending, I would assume that a dividend, one way or the other, is not ideal for it. Now, they might have a preference if a dividend is going to happen, but I would suspect, all else being equal, they would just rather have no dividend occur. That is, no share dividend occur, whether it's a forward, whether it's a reverse, doesn't matter. I suspect they would not want to have that happen to begin with.
Someone on Girk's Discord said that neither of you guys own a comb. Is this true? Well, Justin, do you own a comb?
What's one of those? No.
I do not own a comb, but if you asked hairbrushes, I have many.
As many shoes? As many pairs of shoes, or just...
Yeah, well, I do
That's
have...
the real question you want to ask.
I do. I think I went to Dallas for a week, and I'm pretty sure I brought 2 hairbrushes. So you always have to stay strapped in case you lose one. Justin, he doesn't get it as he's a bald guy. Oh, Justin, oh shit. What's your cost basis on BBBY?
I'm at like 15 right now, but like once a week, I generally write a CSP on BBBY, and so it's close to like $8 and $8.50 or whatever, right? So I keep averaging down on that front. I've also got a bunch of calls for, I think, 80 for January 2023, and so I'll probably pick up a few more of those.
Will monkeypox cause MOASS? Yes.
So actually, let me give. I will give a serious answer to this regard. So you know how like Pipe always talks about the sequencing of events to lead to like a MOASS or whatever, right? So here's something that could happen. Like it always starts with a Vogel-Vanna squeeze, and like Josh and I, it took us a long time to figure this out, but it's and I think this is what it is. It's the rate of change getting out of control. So let's go back to monkeypox or whatever, right? If something happens where just suddenly the market like freaks out all of a sudden and there's a rate of change that blows up a volatility. So in other words, someone's done like a volatility swap or whatever, right? And the rate of change overwhelms the volatility swap due to some outside catalyst. Like again, people freaking out because of like monkeypox or whatever fresh hell the elites have planned for us, whatever. That in turn, can start the sequencing where you get this positive feedback loop between, let's say, the option market makers on GME who have to hedge their position for the options that they've written, but more options are being bought by the volatility guys who are trying to manage their risk, which creates the gamma ramp, et cetera, et cetera, et cetera. So in that case, the answer might be yes. But if you want to make it if you want to zoom out to an even higher level, what I would say is the thing that's going to break the system, it's going to be like a snowflake. And it's going to be a snowflake that hits somewhere just right to release the avalanche that starts down. Like think back to what we were talking about with Tether or whatever, right? As if confidence is broken, and it doesn't matter if it's a real thing to break confidence, it doesn't matter if it's a fake thing to break confidence. All that matters is the perceptions there that breaks confidence. That's I think what's going to start this, start the trigger on that regard. But I do think that Pi-Fi is probably right, and the sequencing he describes to make this happen. So,
how much GME do you think CCP owns, either direct registered or options or short CCP?
CCP?
Can you please? I don't know who CCP is, Hyder. Please type it in the comments and then we'll answer.
Is that the Chinese Communist Party? He is, isn't he? Yeah.
I was out, today in Boston. It's actually incredibly nice and warm out. I was out playing tennis earlier, so I am very sunburnt.
Yeah. So Rocket All Hood. So just so you say that, like I was buying.
You need to read it. Justin,
oh yeah, sorry.
Is still lower than Gertz on BBBY. Good job. I started buying a 15 because I thought it was the bottom. Boy, was I wrong. I'm super bullish on BBBY, even if the cycles and it's still priced below the fundamentals analyst consensus.
Yeah, so here's a question for everyone in the chat or whatnot, right? So like we often focus on GME, like I'm doing the option, wheeling options or whatever, right? But like for BBBY, like it's almost like 60 cents right now. It's beneath 70 cents if you want to buy a leap for BBBY 80 January 2023. And my cost basis on my long-term contracts for BBBY, they're a bit more than 80 cents. So just rest assured, just rest assured it's you can double it again, double it once more, and probably double that, and you'd still be underneath my cost basis at like 64 cents. But my point though is that like if people are looking for kind of like some option action like that actually, because what at 64 cents, that's what That's $64 a contract.
Hmm.
I mean, or
Yeah, yeah,
whatever.
yeah. You dump 10 contracts. I mean that's
Even 100.
that's quite a
Yeah.
bit of leverage. Not everyone's pulling your types of strings, Justin.
Yeah. Oh,
uh,
China. Yeah.
yeah. So yeah, China probably owns all of them.
Yeah. So I.
It
Yeah.
seems like there's no more questions. If we don't get one in 10 seconds, then we will end the stream early.
I've got a
Justin,
question,
yeah.
Josh. Why are you so selfish? Because you don't shave your hair? Because that's the real
Nor,
catalyst
nor
from.
will I. Well, good thing Hyder is actually going to Alaska for the next month or two, so he will not be away from his broker. Therefore, MOASS is available to start, and I can and I can keep my hair as well. So I mean, it's a win-win.
Yeah.
And at what cost? At what cost? Well, oh, here we go, midnight. Do you think that the continued downward pressure on the overall market and GME will affect the timing and the extent of the stock dividend?
That's a good one. Let me think about it just for 1 second here.
Yeah, you think about it? I haven't a clue.
I think that I agree with PiFi that Cohen's no fool, and Cohen must be aware of these cycles going on behind the scenes. I don't know what he wants to do with the cycles, but he probably gets that they're there. As far as the market in general, like right now, GME is still coupled to the market in the sense that, some days we might overperform, some days we might underperform, but in general, the market goes down. I think about what happened this past week or whatever, right? Even with the decline going down and even with FTDs coming in, which will certainly help, they might not be enough to overwhelm the cross current of institutional selling from like a pan market wide sell off or whatever, right? So that's a toughie. Like the way I would think about it is that until GME decouples from the market, it hasn't decoupled from the market. So I would kind of lean towards GME will follow the market. Now it might over or under, but it's still going to follow the market. I think one of the things that would make me change that tune is that if there were to be something to happen, like if there was like a collateral call or a margin call that got kicked off, like again, not necessarily related to GME, but started somewhere else, then you might start seeing the dominoes fall. As of how many dominoes have to fall or how long it takes for it to get back over to GME land, I don't know the answer to that. But the market going down, if the market went down, especially if the rate of it going down overwhelmed the volatility swap, then I would suspect that this might start breaking, the very finely tuned internal, trades that these very advanced, players have set up. But again,
And then
this is
another great thing is if let's say the stock market's going down and because of these FTDs, GME actually starts to go up, they'll have an extreme negative beta to the market. And in that circumstance, a lot of these hedge funds and institutional guys, they'll buy a stock if it has a negative beta just to kind of test the waters because like there's just something to it. If there's an
yeah.
extreme negative beta, you kind of just put some play money to it, but that would cause more FOMO and more hopefully option buy-in. So there's still a lot of cross currents.
Yeah, and here's one other angle to consider too. It's the crypto tie-in. It's the crypto tie-in because I think back to what happened. What was it now? 2-3 weeks ago when Luna and UST blew up. Like you saw the market blowing up too. And like one of the things when it comes to the Bitcoin or back up when it comes to the to the crypto community, especially the Bitcoiners, they say like, listen, we've got this inflation or we've got something that we want to be invested in that it's not part of the or it's not correlated to the dollar or to the traditional system. But when you look at the market and you look at the price of Bitcoin, there's a lot of correlation there. So again, this is what it gets back to the thing. Like so, it might look something like this. Like if something happens with Tether that blows it up, and in the process of Tether blowing up, people start dumping Bitcoin, and people start dumping Bitcoin.
Well, that would
some,
be a liquidity event. Under a real liquidity event, I expect GME to be going up and inversely correlated. But like just a regular downturn, what we've seen for the past few months, I entirely expect GME to go down in that circumstance. Except with all this FTD exposure, it's going to be tough. There's a lot of cross currents there, and I don't know. The stock dividend, I think, will definitely help, especially with FOMO. And we did see that with just when GME got down below like 7, like when it got into the 70s. That's the first time where we saw extreme option buy-ins for a while, and especially like the 15 to 1 people actually just buying the stock because people do want to own it.
Yeah.
Oh, well, last question. By the way, you guys made a good prediction on your May 17th video. I watched a few stocks make moves to the upside on Friday. GME went up May 17th. What did we even say? A few good predictions on May 17th video. I watched a few stocks make moves to the upside on Friday. GME went up $5. I think that was the video where we talked about I'm bullish on stocks. It's really this next week where I'm pretty bullish, and that's mainly because a bunch of puts expired Friday, and I think that we need a massive put wall on the market to really drive it back down. Especially, I think value next week is going to do very well. But I'm also saying that because I'm pretty long value. After that, it's all hands off. I do think we'll go right back down. This is the last question. Colin, hey guys, wondering your predictions for shareholder meeting / share recall and MOASS time limit. Also, thanks for taking your time out to answer questions. Thank you very much, Colin.
Yeah. Josh, you want me to grab this one?
Yeah.
Okay. So, Colin, the first thing I would say is, like, for God's sakes, like, pretty much all we do is regurgitate Python in this regard. So, I would follow him, but like, this is my take on how I think about it, whatever, right? I expect into the shareholder meeting, GME to remain volatile, but ultimately trending downward. Okay. And so I would not at all be surprised to see GME get into the low 80s, the 70s. I don't know if it's going to get beneath 69, just because it's 69, but whatever, we'll see. But I do think that the people, like, back up. So I expect to see that going down. As far as the timeline for MOASS going through, if we don't have MOASS this cycle, or I'm planning my positions right now that I trade around to assume that MOASS will not happen in the June, maybe July cycle, but I want to have myself positioned to take advantage of, let's say, a quarterly cycle run-up. And so that means probably in early June or whatever, right? Or no later than early June. I'd probably start buying August calls for that, for in anticipation of a run-up. And if GME gets down to, like, the 70s, I'd probably pick up some more shares as well. And then if it does run, and it does actually blow up the system when we actually start having a MOASS event, I've got another position where I have a bunch of leaps on GME that I'm really underwater on, but that's what I would use to kind of carry me into and manage my exposure from MOASS. So as far as the timeline goes, I don't have a good answer for that one, but I do think that we will see some action late June, July. It's just depending upon whenever they choose to run the stock. And if it's a quarterly run-up, like an August contract, for example, might capture that. And if it is MOASS, then in that case, you can get like a leap contract or leaps if you want, especially right now because they're cheap, or much cheaper than I paid for them back in the day to capture,
Yeah. All right. These perk, if we get a 2-for-1 split, the price will drop 50%, or will we have two shares? You will have two shares at a 50% discount, but that does not mean the stock actually drops by 50%. It just means the new stock is, let's say it's $100, it drops to $50, but instead of having one shares, you have two shares. And
instead of having
nothing actually changes fundamentally. It's just that everyone gets two shares instead of having one, and then the price of the stock will just fall down as well.
So it's like making change. Yeah, $100 bill to 250s, or vice versa.
It's still the same. All right, guys, thank you very much for watching. If you do enjoy the video, please leave a like because it actually helps us a lot. So do not be afraid. So thank you guys, and we'll see you on the next one.
Take care.
I don't know how to end this.